Hi and welcome to Khaleej Times. My name is Dhruv and you're listening to a podcast series on financial planning. If you're someone who's looking to invest in gold and oil, then you're at the right place because I have with me on the show not one but two experts today. I have with me Tobias Young. He's the head of product development and strategy from DGCX. He's joined by Mr. Abdulla Harmoozi. He's the head of sales of MENA region, again from DGCX. Welcome, gentlemen, on the show and thank you so much for speaking with us today.
Good to be with you.
Thank you.
Okay, so I'm going to start with the first question. Before I do that, Tobias, do you want to tell us a little bit about DGCX?
Sure.
As an organization?
Yeah, no, absolutely. Would love to. So the Dubai Gold and Commodities Exchange was founded in 2005. We actually just celebrated our 14th birthday, so thank you. We are the largest derivatives exchange in the Middle East. We trade in 4 separate asset classes. Currencies, equities, metals and hydrocarbons, and you'll hear more about the asset classes as we go on. I think obviously today we're focusing on oil and gold. On top of that, we have our own regulated clearinghouse. As an exchange or as a group, we are regulated by ESCA, which is the Securities and Commodities Authority of the UAE, and we have equivalents with the DFSA and FSRA as well. So fully regulated as an exchange, as a trading platform, and as a clearinghouse.
Perfect. So let's start with the discussion today. My first question, the basic, right? I mean, oil and gold, we all know they're components of global economy. How do you think historically, that they're so important, and what relevance do you think that has, with the current world, like in times of today?
Sure.
Would you want to start, Abdullah?
Yeah, sure.
Okay.
So since time immemorial, gold is being used as an asset for store of value.
Yeah.
Where mainly it was against inflation. So with the recent development of new market economies, gold is being used as a hedging asset against economic recession or the underperformance of economy, as well as in case of any geopolitical uncertainties.
Okay.
Yeah.
Okay. And Toby, what about oil?
So oil, let's say it's a relatively new asset class in comparison to gold. I mean, gold goes back for centuries. Gold has been used as money, as a store of value, a method of exchange. Oil, having been discovered in sort of the late 19th century and then sort of the early 20th century in the Middle East, has really sort of grown over the years and has become more apparent in the global economy. It is something that people look at in terms of how the economy is behaving. So if the economy is racing away, people talk about high oil prices, huge demand for it. If times are tough and we're in a bit of a recession or a slowdown, you tend to see the oil price a little bit lower. So it actually has an effect on pretty much everything we do every day, from the petrol we put in a car through to the plastics we buy or the other goods that will need oil in manufacturing.
Perfect. So, so let's just talk about today, and let's talk about, investment. Yeah. So I want to know, why do you think that investing in commodities is important? Like, why do you think that it should be a part of someone's portfolio when you have, so many other options as well to invest in?
Yeah. It is actually advised by many portfolio managers or investment managers as well to always go for a diversified portfolio.
Yeah.
So what normally happens, let's say, in the recent years, equity markets, they've been enrolled, and people, they were investing heavily on the equity market. But obviously, sometimes depending on the state of economy for various countries, we see that there's a significant decline on the equity market.
Yes.
That is where actually most investors, they have actually went for a more diversified portfolio. So they have diversified into different alternative asset classes. Gold is being one of them.
Okay.
Yeah.
Having said that, Abdullah, would you say that then the surge and, the percentage of price rising and falling when it comes to, say, for example, when it comes to stocks, is more intensive than gold? Would you say that? Do you think gold is probably more consistent? when it comes to, price surging or plummeting?
I would say in the long term, yes, it is. As I mentioned before, it's used as an asset for store of value. So that's why, as a long term, it could hold its value.
Okay.
Yeah.
Okay. All right. Because it's again, it's also tangible. It's something that you have.
Exactly.
Like a physical product. What about oil, Toby? What would you say about oil?
Oil is a little bit more difficult. Oil is tangible, but I don't think you're going to want to touch it.
Yeah.
When we talk about investing in these assets, Abdulla said sort of a diversified portfolio is important to people.
Yes.
People look at diversity in different ways, and there's a number of ways. You could again look at the diversity within the already number of different ways you could look at the diversity. So for example, you could be looking to trade all these asset classes, but you could do it through equities if you wanted to. If we're looking at the specifics of oil and gold, gold is easy to store, easy to hold, easy to carry.
Yeah.
Oil, not so much so. You're not really going to want to be storing a barrel of oil under your bed.
Yes. Absolutely. Yes.
Yeah, but a kilo of gold is relatively easy in comparison to that.
Any day, I would say any day.
When we look at the price movements of the underlying, you mentioned with gold, but if we look at it sort of with equities to oil, oil is a lot more volatile than equities, or tends to be. As I mentioned before, the price of oil goes up or down depending on economic impressions, perceptions, understanding, and consequently, it's not unusual to see 2, 3, 4% movements in a day. Now, it's very unusual to see that in equities. So, as an asset class, it is volatile.
Yeah.
But when there's understanding around the product, then it can be something that would be of interest to invest in.
Okay. So, can you just elaborate a little bit also, by telling us about the various avenues or the ways that, one can invest in oil?
Sure. So for oil, if we look at when oil futures were launched back in the 80s, you had oil futures and you had a few oil companies listed on stock exchanges around the world. Now, there's a number of ways you can do it. So you have the oil futures, obviously traded on the DGCX. They are traded in other places as well. I wouldn't like to show any bias. Equities, you can invest in oil companies, oil supply companies, oil trading companies, oil drilling companies, oil rigging companies. So you get a full gamut of companies that you can invest in all the way through from downstream to upstream. On top of that, you have ETFs and ETNs, which are exchange-traded funds, exchange-traded notes. Further to that, you do have the availability of other avenues, including OTC trading, which is maybe a little bit large for what we're discussing, and also the ability to trade CFDs
So,
as well.
if I may ask you, what do you mean by OTC trading?
So OTC, yes, we like our acronyms. So OTC is over the counter, and that's usually for very large trades where we'd be talking in sort of millions of barrels. So instead of storing under your bed, you'd probably be storing in your house.
Perfect. So when you say OTC trading, do you mean that it's an intraday?
Yes and no.
Okay.
Yes and no. So over the counter, they tend to be larger size trades, and they're often done by the physical player. So actually, they can be more longer term. But then the other side of that could be a bank, it could be a trading company, it could be an entity that is looking to take that position and then liquidate it shortly afterwards to take a very small gain on a very large quantity.
Okay. So this is basically, pardon my ignorance, because this is coming from someone who's not really ventured into that space. So I'm just going to ask you, is what I've read theoretically. So as I was just doing my bit of research, which is very important if you want to invest, perhaps into anything. Oil futures are very volatile.
Yes.
Very highly risk-driven. You need to do a lot of research. You need to know about them, and then, of course, you need to have a large amount of money to invest as well. Versus, for example, commodity-based oil ETFs.
Yeah.
Would you stand by what I said? I mean, would you say if people want to invest, then that's the way to go forward?
There is ways.
Yeah.
I mean, you said people have to have a lot of money. I think a lot of money is different for different people. ETFs are relatively easy in terms of understanding what the risk and reward is. Futures are leveraged. With leveraged, you get charged what's called margin. So if you buy a contract, you're probably charged around 5% of the underlying value, which means in theory you could buy 20 times as much, but then the risk for having 20 times as many contracts or the open position is that much higher.
Yeah.
So I wouldn't necessarily recommend one over the other. I've seen people who trade both of them, but it's about understanding your own risk profile, understanding what you're prepared to risk for reward, and then also the time horizon that you're looking at as well. If you're looking at one day, that's slightly different to looking at 1 month, 1 year, a decade, 25 years, or a pension plan.
Okay, so let me ask you guys this: that somebody who's starting out, like a new investor, do you think that there's a rule book for them? I mean, what are the things that one should be keeping in mind, especially when one is looking to invest in gold or oil, like psychologically, and even in terms of making sure that the money is safe. You understand? Yeah.
In my opinion, I think investing is all about taking a risk. So the investor should bear in their mind that going for any investment could be always risky. But your investment could be safe by doing the right research. So if you do a right research based on the fundamental of the markets for respective asset classes, then I think you are on a good side.
Okay. Yeah. Okay. So Toby, what would you say to that?
Yeah, I think to emphasise on what Abdulla said, people need to do their own research. People need to do their homework. You've got to understand what you're investing in.
Yeah.
If you don't understand it, you're taking a monumental risk with your money. On top of that, people need to identify what their goal is. As I said a minute ago, are people looking to trade for a day, a week, a month, a year, all the way through to their pension? With each sort of additional time period, the likelihood of, or historically I should say, the likelihood of being on the right side of the trade increases. So if we look at equity performances throughout the years, we go back to the 1929 crash. So what are we, 90 years ago. The Dow Jones, I think, was trading under 1,000. It was probably 500. We're close to 30,000 today. I think it printed above 28,000 the other day. So if you look at that over 90 years, that's 56 times your money.
Yeah.
But there's also the possibility that if you had invested on Thursday night, by Friday morning, you could have lost a large amount of money because you were looking to trade in and out of a position quickly. So it all depends on an individual. They need to do their own research, they need to do their homework, and they need to understand how they want to invest. They need to have their investment goals ready and set.
Okay. Do you think that research is enough? I mean, what I'm trying to ask you is that, do you think that one can do the research and one can start out, or do you recommend that, especially if you're a new investor, you should be reaching out to someone who's an expert in the field, especially when it comes to asset classes, because there are too many, and it's very easy to kind of, just get, to fall into a state of confusion. I mean, not to be able to understand and have a clarity on it, for example.
It's always better for a new investor to seek help or financial advice from certified financial advisors, as well as one of the things that he could do as well is getting an experience from those who invested. So sitting with them, talking to them, seeing what they have done, what they invested in, to kind of give him this flavor of investing, which I think it will add a lot of benefit to him.
Okay.
Absolutely. I think the other thing that we can see, or we can say, is that people have an inherent understanding of certain asset classes dependent on where they live. So, for example, coming from the UK, I understand the way that cable moves. That's the US dollar against the pound sterling. I understand how the euro moves, or euro dollars, the US dollar against the euro. Someone based in this region, they're likely to understand two things better than others. One is gold, because it's been so traditional out here, and the other one is oil, because of where we are and the news that's out there about what oil is, how it works, and how it's moving as well.
Okay, perfect. Since we're talking about oil, my next question, Toby, to you is: how do you think the access to the oil sector has grown, from the perspective of an investor over the years?
I think, as I mentioned earlier, I think there was a number of different ways to invest in the oil sector.
Yeah.
And we went through from futures to equities to ETNs to ETFs, CFDs.
Yeah.
All of these things are of interest. The key thing is that a lot of them are now regulated. And I think that's the most important thing for anyone starting out, is to ensure you work with companies that are regulated and with individuals that are regulated.
Okay.
As a new investor, you may be a little, I want to say naive, but that's not right. That's not right. I think that almost sounds insulting. But it's true, there's professionals out there that have been doing this for years that would look to potentially take advantage of someone. Everyone's out there to try and make money at the end of the day. And I think the key thing is make sure that you are dealing with people that are reputable.
Okay, Toby, that was a great piece of advice. So you need to make sure that you actually go to the right people to seek advice, right? That is really, really important, especially if you're starting out and you have no experience in terms of investing in commodities. All right, my next question, since we're talking about regulatory bodies, what are the regulatory bodies here in the UAE, to ensure the safety of investment in case, there is a fraud? And if that happens, how can one register a complaint?
Yes, well, there's a number of regulatory bodies here. So the DGCX, Dubai Gold and Commodities Exchange, are regulated by the Securities and Commodities Authority, known as ESCA. They regulate securities and commodities, as the name would suggest, onshore within the UAE.
Okay.
Additionally, there's other regulators within the UAE as well. So, for example, we've got the DFSA, the Dubai Financial Services Authority, for the DIFC free zone.
Okay.
And then Abu Dhabi has ADGM, the Abu Dhabi Global Markets, and they have the FSRA, the Financial Services Regulatory Authority.
Okay.
In addition to that, we've covered the free zones, we've covered securities and commodities, there's FX as well, that is covered by the central bank.
Okay.
There's other regulatory bodies that are licensed from government institutions that will cover other parts of regulation as well.
Thank you, Toby, for sharing all the insights. All right, so we've spoken a lot about oil. Let's shift our attention to a little bit on gold, Abdulla. I want to know, so what is Sharia investing, and how do you think gold is an important component or part of Sharia investing?
Yeah. So Sharia investing, it's basically any investment done as per the Sharia principles.
Okay.
Usually, the principles are derived from the religious precepts of Islam, mainly from the Holy Quran and Hadith. So, as I have mentioned before, gold is historically always being used as a store of value.
Yeah.
So, currently with the development of new market economies, there was a need, and that need came actually from the Sharia funds, that they actually require a way to trade gold as per the Sharia law and regulations.
Okay.
So in November 2016, the IUF, which stands for the the Accounting and Auditing Organization for Islamic Financial Institution, in association with the World Gold Council, have adopted a new standards on trading gold as per the Sharia rules and regulations.
Okay.
So in March 2018, DGCX have launched the world's first Sharia spot gold contract that is listed on an exchange, which is totally different than an OTC market.
Okay.
Yeah.
Yeah, but first I want to understand. So when you say that the way you invest in Sharia gold is like, am I okay to say is different than the way you invest or trade in gold traditionally?
Yes.
On stock exchange?
I mean, because since we are a commodities exchange, so so the only difference that you get from an Islamic or Sharia-compliant Sharia gold contract with a conventional one is that it's physically delivered.
Okay.
So once you actually buy the gold, you will get the full delivery of gold. For example.
Wow.
Yes,
really?
exactly.
Okay.
Yeah.
Okay. So you have the physical product with you.
Exactly.
Just trading it, online or on stock exchange.
Exactly.
Interesting. So we of course spoke about the various avenues where you can invest in oil. What about Sharia gold? So what are the ways that one can invest in Sharia gold? What are the various avenues? So one you mentioned, OTC, and the other one.
Yeah. So basically, as I have mentioned, you can simply go to a gold souk and buy, let's say, a 1 kilo bar of gold, and that is Sharia, right? Okay. And the second way is to go actually to an exchange. So most of our investors, they actually prefer a very regulated environment. So here at DGCX, since we are a regulated platform, people, they feel more comfortable trading with us. So with trading with DGCX, you get the benefit of knowing the quality of your kilo bar, the one you're buying, as well as that your money is safe. You know that the price is very transparent based on the global prices of gold. So these are the main aspects of trading gold on DGCX or in a regulated platform.
Okay, Abdullah, since we're talking about investing in Sharia gold, I want to know that why is Sharia gold important, to a Sharia-compliant portfolio?
Yeah, that's a really good question. So before I actually tap into the answer, I would like to say that now the estimation of the Islamic investment market is valued at $2 trillion, and there is a huge potential that it will grow to around $3 trillion by 2024. Therefore, gold being a very important asset in terms of diversification, and with the IOF standards that was adopted back in 2016, that actually had opened up a very important asset class for the Sharia funds. And that also helped the Sharia funds to diversify their portfolio more efficiently.
Perfect. Since you're working with DGCX, I want to know, are there any particular benefits, of trading or investing in Sharia gold with DGCX?
Obviously, yeah. So trading Sharia gold with DGCX, there are a set of benefits that you get. One of them would be basically the end-to-end delivery solutions plus storage solutions. So we here at DGCX, we do have a contract with the third-party vendors where we can actually keep your gold safeguarded. Plus, as well, you get a very transparent prices depending on the global markets. So these are one of the benefits that you actually get while trading DGCX, if not going to actually trade within an OTC market, where sometimes you could see there could be, I mean, don't mark me for this, but there could be some manipulation in pricing. But with DGCX, you get a platform. It's a regulated platform. You get live prices, and what you buy is
what you get.
Exactly.
It's absolute transparency.
Exactly.
Toby, so what about oil? Is it the are there any particular benefits when it comes to oil, trading with DGCX as well?
Well, absolutely. We do have a number of oil contracts listed on exchange, with the Brent, with WTI, the two most globally traded oil contracts. So there is the ability there to trade them. Our exchange fees and margining is competitive in terms of the price it costs to trade. So that is certainly a benefit. On top of that, we offer margin offsets in between the two products as well.
Okay, perfect. And any new oil or gold products that are coming to DGCX? Would you like to talk a little bit about it?
Yeah, we're working on a number of innovative products at present. Obviously, I can't go into details on all of them, but one that is with the regulator is a 10-gram mini gold or retail gold product that is going to be make the exchange more accessible to the retail participants.
Okay, perfect. Before we actually wrap up the show, I just want to know that it's been a great discussion, but are there any final thoughts, that you would like to share with our audiences who are watching us or listening to us? Something that you would like to say when it comes to investing in gold and oil?
So do your research.
Yes.
Okay. Choose the right product.
Yes.
In a regulated platform.
Yes.
And have a safe investing.
Absolutely. As Abdullah said, research, homework, regulation, and the other thing is be comfortable in what you're doing.
Exactly.
Don't risk money you can't afford to lose. And if you're investing for the long term, make sure that that's exactly what you're doing. And if you've bought something, you've bought an equity, you've bought a commodity, that after 1 week you're not panicking. Trade within your means.
That's actually a great advice. So I think it would be wrong for me to ask that. So when investing, should not be keeping a certain percentage, for commodity investing, right? I mean, you think that is just a wrong way to approach. Like, for example, I make this much money or have this much income on a monthly basis, and this much percentage is what goes into, say, for example, stocks, and this much what goes into the real estate, and this much what goes into commodity. Do you think we can really put a percentage to it, just for the sake of diversification, or you think
no? I think it's up to an individual. It's up to what they feel comfortable with. I'm sure there's financial advisors out there that will have a formula. We're neither of us are financial advisors, so from what we've seen and what we understand, it's about comfort. As I said earlier, people from this region may be more comfortable in oil and gold. I'm from the UK, I might be more comfortable in a currency or in a particular sector of the equity markets.
Okay, all right. So, with that, it's a wrap. Thank you so much for the discussion. I hope the audience has enjoyed it as much as I did, and thank you for sharing some great advice for anybody who's looking to invest in gold and oil in the region. All right. So all you have to do is log on to KhaleejTimes.com, where we have lined up a series of 10 episodes on anything and everything that you want to know about financial planning. All you have to do is log on to the website. And you can also tune into our social media pages, Facebook, Twitter, Instagram, YouTube. You can watch the podcast there. And if you want to listen to it, then of course, go to KhaleejTimes.com, browse it, navigate, listen to anything and everything which we have put there on financial planning. Also, let me remind you that our podcast series is powered by IG. It's a platform where you can trade in over 16,000 financial markets and products. Thank you so much for listening to us, and keep tuning into KhaleejTimes.com for the upcoming podcasts on financial planning. Take care.